All right, continuing on with chapter 2. Now let's suppose that you are an investor. You have some hard-earned money and you're thinking about buying stock in a corporation. What are some things that you might consider before giving them your hard-earned money? Well, some things you might consider might be, well, what products do they sell, right? What's their future outlook? For example, if their product is a gasoline engined vehicle, then their future outlook probably isn't good, since at least in the state of California, after 2035, that's going to be prohibited. Car manufacturers will not be allowed to manufacture gasoline engine vehicles. So that might concern you if that is their product. Their future outlook is limited given some imposing regulation. You might also consider the demand for their product, right? Do they have a loyal customer base who demands their product, like Apple, who has customers that line up the night before a new model is released, right? But you also might consider their finances, right? And that's what we're going to focus on in this accounting class, looking out for this individual investor, making sure the money that he or she puts in has enough, that the company has enough financial health and longevity to be able to return it or to have that investment appreciate, right? And that's what the SEC is out to look out for. They're out to look out for that individual investment. So the SEC stands for the Securities and Exchange Commission, right? They are a federal government agency. Okay, so they are a government agency tasked with overseeing public companies. So they regulate those public companies, and one thing they make sure is that those public companies provide financial statements. So public companies must provide at least annually financial statements to the public. Okay. And that is law. It's the Securities and Exchange Law of 1933 and 1934, which says if you want to be a corporation that accepts investments from public members, you have to provide financial statements to the public so they can assess your finances, right? They can look and see what the product is. They can look to the industry to see what the outlook is and look to the market to see what demand is, but they can't really have access to your financials unless you make it available. And so that's what the law says. Companies that want to sell their stock to the public have to make available financial statements, at least on an annual basis, to the public. And that's going to be our next topic in topic 2.1. Is those required financial statements. We're going to see that there's actually 4 required financial statements. And we're going to talk about what's on each one. And then eventually by the end of the chapter, you'll be able to prepare them. So go to the next video so we can start learning about those 4 financial statements.